Hello traders, the title of the video is Sharpening Your Fibonacci Retracement Trading like a Master. Alright, let's get started. Without too much blah 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 from my side, if a financial instrument goes up from point A to point B, alright, and then pull back a bit, professional will apply the Fibonacci extension to that pullback, and they will highlight the 50% Fibonacci retracement of that pullback. All right. Recently, I have recorded a video that I titled "How to Use Fibonacci Retracement to Pinpoint a Best Trading Signal." I highly recommend to trade it to watch that video to learn more, about the Fibonacci retracement. All right. So this is what usually takes place. Price goes up from point A to point B. Here it is. There was a trend in first from here all the way up here. If the price pulled back down to this point, we apply Fibonacci retracement to that pullback, and we highlight the level of 50% Fibonacci retracement level. Going to color that 50% into orange on my chart. You see that's the orange horizontal line. That's the 50% Fibonacci retracement level of that pullback. Now the reason why I was telling you that you must watch the video that I titled "How to Use a Fibonacci Retracement to Pinpoint Best a Trading Signal" at Day Pro Trader YouTube channel is because one can use a double 50% Fibonacci retracement levels, which means 50% Fibonacci retracement level to the pullback and 50% Fibonacci retracement level of the trending phases. All right, I don't want to talk about that today. All right, but today what we want to talk about is sharpening your Fibonacci retracement trading like the master. So because a lot of traders will highlight that 50% level, which is the orange line here, you will notice carefully among the monthly chart, the financial instrument that we are looking at is a Dish Network Corporation, EPIC DISH, Delta India Sierra Hotel. It's an American stock belonging to the communication services sector. All right. So a lot of traders very often, because they know that after the price pullback, this is a good one in fact, because you see how it came down very fast. So there was a trending first, and they sold it down very fast. You see how it came down almost in a straight line. If you see it like down, it came down in a straight line like this. Very often the price will find a resistance around the 50% Fibonacci retracement level. But now, how do we sharpen? This is about sharpening your Fibonacci retracement trader. It is a mistake for Fibonacci trader to try to sell at that 50% Fibonacci retracement level. Why? Why was he? Those who were selling here, you see there were some sellers here. You see the price came to that orange line. People sold it down. If there was a signal, it's good, all right? It was a signal. And the second one, look at this. You got a shadow and a tail, which means it was volatile. Price went down and then went up again. You see, it went up all the way here, people sold it down. It went down all the way here, people bought it up. So something was brewing here. So it was completely wrong. In fact, traders that were selling here were rushing a bit too much, because there is a better place to sell. Anytime you want to look for an opportunity to sell, or anytime you are looking for a trading setup, this is what we were talking about last time, talking about chart analysis from different angles, you want to select the best place to sell. Generally, people want to sell at the 50% level. There will be orders here to sell. As you can see, there were orders here to sell. And the price did find resistance a bit there, but it quickly went above it. Now we are here. Why here? Because if you look carefully, this trend line, you see the price was in this. You see this, the blue channel here. Okay, that trend line is so important. So what the price has done, here, see it breaks above it. Now it breaks below it again. That trend line here, this trend line, this one connected this low, and this one here. We break below that trend line. The price was heading to retest it here. why you want to just use the Fibonacci, the 50% and sell it here as you have been always doing it. In fact, if you look carefully, there was a resistance here, you see here, price went down and rally up for 3 months before coming down here. So people did sell it here before. You remember the 3 questions that we must ask in the financial market. Where are we now? Where are we going? Okay, what has happened before? Here they did sell it before here. And that level, they did sell it in the zone of $65 zone. And we are again there. And not only that, now we have the intersection of the 61.8% Fibonacci retracement and that trend line. That's where we are now. It's a hot spot trending zone. The intersection between the Fibonacci extension level or the Fibonacci retracement key levels and the trend line are hot spot trending zone. So normally, all right, if the financial instrument goes up from A to B, all right, and then pull back, there are orders placed at 50% Fibonacci retracement level to sell, all right? Doesn't mean that the price will definitely come down, but people are looking for opportunity to sell at that 50% level of that pullback. But whenever you are applying that strategy or the 50% level, try to look around and say, is this the best place to sell? The 50% Fibonacci retracement is right here, but the best place to sell is here, the intersection between the 61.8% level and that trend line. Price did break below that trend line and was heading to retest here. So if you are looking for a trading setup, a bearish trading setup, this is the best place to look for it instead of at the 50% level. Sometimes the primary final resistance at the 50% level, but just be aware, look around and see, and look around, okay, and check whether there is a better place to sell or not. But if there is a signal to sell at 50% level, you will take it, yes or no. If there is a bearish trading setup at 50%, you will take it. But here, the small money want to retest that trend line, and this was a better place to sell. Now, at this point in time, you can see that we have all this tail here. Some people did sell it few times. This month, it went down all the way here. That's the first reaction as the price retest that intersection between the 61.8% and that trend line. All right, here it is. So we will now, from the monthly chart, if you are swing trading, okay, we'll go to the daily chart, and then we will monitor. Hold on, please. I'm trying to remove my green spot, and we'll monitor the reaction on the price in that zone. Okay, see here, that blue trend line and that 50%. This is the intersection right here. Okay, hold on, please. Okay, now that intersection is here, and now you want to. So we have on a daily chart, okay, a consolidation taking place, all right, in a triangle here. The triangle means that anything is possible. So you can be a little bit patient because a price was acknowledging that hotspot trade zone by consolidating in that triangle. Okay, see here, it's bumping up and down. So if you want to sell, after you notice that intersection, will be at the top of the consolidation here. So you sell, you come here, take some profit. This is what's going on here. People are selling at the top of that triangle, coming down. Here again, they did it, they put it back here. Some people are buying here. So because you know that a lot of people will be more willing to sell, you can ignore, okay, the turnaround here. You do not want to buy, you will be positioning yourself at the top here. Until, because the triangle means anything is possible, if it breaks a ball from a higher low or retest and find a support, that's when you can, okay, pretend to buy. All right. On the other hand, okay, here it is. If you sold it, okay, here it came to this point. It's normal for some people to take profit here. If it now pop out of the triangle and then retest here and find a resistance, because the triangle means anything is possible, okay, it can continue to go down. And if you receive a sharp signal here, it's going down, where is the target? You use the height of that triangle and put it right there, and your greedy bearish target will be in the zone of $55, and your midpoint target probably in the zone of $59.62. So as I show you now, you can see clearly that okay, it's known about 1 plus 1 equal 2 when it comes to Fibonacci trading. We can sharpen our Fibonacci trading, looking for the best place to buy and to sell. We want to look for hot spot trading zone, use the hot spot trading zone in conjunction with our Fibonacci trading strategy. Our Fibonacci trading strategy in this case is that if a financial instrument goes up and then it pulls back like this, very often, so after a lengthy trend and a correction is beginning, profit taking is beginning, you see how it came down, very often professional watching the 50% Fibonacci retracement level. But in this case, there is a better place to sell. That's where the smart money will sell. So think like the smart money, always buy or sell at the best place. Don't rush like a retail trader who do not care where they are buying, but the smart money always do care where they buy. And very often, sometimes they will buy or sell at the same price, at a specific price level. They did sell it here. Now we are here. We implement a different time frame trading method to trade it. All right. So don't just use the Fibonacci retracement anywhere, anyhow. Ask questions and apply it with hot spot trading zone. Draw trend line. If I did not draw this trend line now, I will know that okay, there is a hot spot trading zone. Pay attention to the price sale, because sometimes when they are using the Fibonacci retracement, they just forget about everything as the price, and they just concentrate on the Fibonacci key levels. Once you know where are the Fibonacci key level, concentrate on the price, draw the trend line, know where are the resistance level, and ask the question, where should I buy, where should I sell? Where did they sell it before? The three questions. Where are we now? Where are we going? Okay, and so on. As I told you now on the daily chart, I set you the target, how professional will set a target. On this chart, all right, the price form a kind of, you see here, how it came down here, you see, 1, 2, 3. So there is a support at this zone. There was a resistance here. Is it going to pull back to form, okay, an inverted hand and shoulder chart pattern to retest that target that I show you on the daily chart, pulling back here, okay, to form an inverted hand and shoulder chart pattern in the target zone of that triangle on the daily chart before going back up? That is the question. Or is it going to continue to go down all the way here? So if it starts going down, we know where is the day target on the daily chart, that triangle. If you break below that target and find a support, okay, all right, and so on, and so on. I also recorded a video today, which I will be posting at dayprotrader.com, how we apply Fibonacci extension to the target level. All right, so check it out. All right, this is about sharpening your Fibonacci retracement trading like a master. If you have any question or suggestion, put in the comment section, and of course I will be recording another video to answer your specific question. If you find this video truly useful, let us know by giving us the thumbs up. If you think that this is a ridiculous video or useless video, let us know by giving us the thumbs down. All right? If you think that this is an essential tutorial, feel free to share with your friend on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the GSTW24 traders talking about sharpening your Fibonacci retracement trading like a master. Happy trading to you all, and speak to you soon.